Now, when it comes to sort of the STEM analysis, let's go through that process. Okay, so I want to do a top-down multi-time frame STEM analysis to this. Okay, so you need to sort of outline what technical tools you're going to be using, how you're going to be using it, what time frame you're going to be using it on, and in the right order. Okay, so let's choose an asset. Are there any assets that you want me to go through? Is there any asset that you want me to sort of apply this to? I'm going to be more in line with sort of a day trading time frame, so a day trading time frame. But okay, cool. So dollar CAD. Let's do dollar CAD. Okay, so we're looking at dollar CAD. We'll start on the 1 hour time frame. Okay, so we'll start on the 1 hour time frame. And what is my 1 hour time frame? What is my 1 hour time frame? Now, something to sort of mention is how far back do you look? Okay, what's the look back view? Right, so how far back do you go to sort of view those markets? There is no right or wrong answer there. Okay, so it's more about, there's two things to consider. One, the current market condition, or the current sort of theme in the market. When has that started? And that's where you start to do your analysis from, right? So if the current trend is a strong bullish uptrend, so you want to start from when that trend begins, and that's where you start your analysis from. Okay. The second option is to go back by a defined time period. Okay, so you could say that, okay, if I'm on the 1 hour time frame, I want to look back 3 months worth of data. I want to look back 3 months worth of data and then start my analysis from that point onwards. And it's important you identify how far back you want to look from. Okay, apart from one of the tools, apart from one of the technical tools applied, which could be, you can go back as far as you like. I remember when we were, I don't know, trading Brexit, when it was trading Brexit, and the pound sold off significantly, where it sold off down to levels that I've not seen it touch since the 80s, sort of 1984, 1985 support level. Okay, so yeah, so, or you could do a merge of the two. Yep, so I'm going to look back as far back as 3 months, but also it needs to sort of be within that sort of trend as well. Okay, so it's identifying the trend and going back where that trend begins, or go back by a defined time period, or a merger of the two. Okay, so now looking at this, what am I looking at? I'm looking at, okay, so we're looking at April, May, June, sort of, this kind of sort of period over here. Now, the first thing we'll sort of identify is, when is that current trend? Where is this current trend? Okay, so if I just put in this horizontal line, and now this brings me on to the next key point here, is to identify that current trend. I like to use support and resistance. I truly believe support and resistance can be applied however far back as you like, right? You can go back to sort of a level, as I mentioned, where I had a level from 1984, 1985 for sterling, and that was where sort of price action stopped, and we saw price action sort of react, and a lot of profit taking took place. Right, this is during sort of Brexit time. So I've identified this key level of support here. Now I can, from this point, start to zoom in and start to sort of identify where I'm going to start my analysis from. So if this is sort of you can see price converging, a key level of support, I would say this is key level support. We're seeing not higher highs or equal highs. Remember, equal highs is key as well. So if I bring up let me just bring up a pen just to clearly explain that. Guys, feel free to ask questions. The more questions, the better it is. Just waiting for a pen to load. Okay, there we go. Right, so as mentioned, right, so price action is key, and we're looking for pivot highs and pivot lows. We're looking for these swings. Okay, so to identify that, remember, sort of price has done this, and it does this, and then it goes back up to that point over there. So I'm looking for, does price go on to sort of come up to this key point over here, this key level of what I identify as resistance. Yeah. Now the question is, what does it do from this point? Does it break higher or break lower? This is seen as an equal high. Okay, this is a equal high. Yeah. If price goes on to break out of this, then it's formed a higher. Yeah. So we've got a higher than the previous high. Right. Suppose it doesn't do this. Suppose it comes back down to sort of our support level. Right. Comes back to our support level. and it does bounce off this. Okay, so now it's got an equal low, this being the equal low, and price goes on to sort of this point over here, and then starts to reverse. Now, when is this a lower high than the previous low? Is once price breaks through that low. Okay, so once it breaks through this low, that's now a lower high. Okay, so that becomes the lower high, and that starts the sort of downtrend. So that's what I need to identify as the swing highs, swing lows. And let me just get rid of this. It's one of that sort of, we highlight where are those swing highs and swing lows. So this is my low, high, it's another new low. This is high, but so is that. So, you can all see this as an equal high. It comes back to sort of, doesn't really come back to the equal low. It forms a sort of higher low, but doesn't really break out of and go on to make an equal high or higher high. So you can see price action converging, right? So there's like a squeeze taking place in this region over here, right? But then it does come back to sort of, retest this support level, and then we've got a lower high being formed. So what's taking place here? So you can see how every time the sellers step in, they're able to bring it down to the support level. Every time. So not quite there, but almost. And there. Yep, so each time sellers step in, they're able to break it down close enough to that key support level. But what about buyers? What are buyers doing? Okay, what is the bulls doing in this case, right? So bulls first goes on to make a good high, right? So that's a strong high, right? But then second go, not really. Couldn't get back up to sort of the highs over here. So you can see that the momentum in the bulls are weakening over time, right? So even though the sellers are able to, you can also see it the other way where the sellers are able to step in at these lower prices to force and push momentum and the price lower back to these key lows. So I can see that already because there's convergence taking place, that the sellers are gaining momentum over time. They're gaining momentum over time until we have that breakthrough. Okay, so that's where price breaks through our key level support, sort of, through this region here. It stalls. So it didn't really exactly, continue to the downside. It needed more sellers to step in. Which it did take place, right? Which did take place. And remember, there's always false breakouts. Now, if I just remove all of this, what I want to do is just focus on this region here now. Okay. So the key point being is that if I just identify this again, it's this key level over here, right? So you can see how price stayed within this zone over here, right? That's like a pattern, a rectangle pattern that forms in markets. Okay, so we have market moving lower, forms a pattern, a consolidation, a range taking place. So if you're sort of looking to trade the range, you're looking to trade the overbought and oversold. You're looking for those reversals to take place on the lower time frame. We remember the time frame we're on, right? So it ranges for a period of time until sort of new fundamentals or new traders who've not seen this sort of breakout taking place, to the downside, step in, and that drives to the next move lower. Okay, so it starts to sort of again consolidate for a short period of time, another new low until we sort of reach a floor over here. You can almost see this as, what type of pattern would this be? Right? If you've got sort of that there, what type of pattern would that be? Yeah. A double bottom, right? So a double bottom being formed here, double bottom here, so equal lows. I'm not including the spike. That could be seen as a sort of a V pattern being formed. There's a lot of sort of this V formations being talked about in the markets. That will be similar one to on a lower time frame, right? Now notice how each time we make a new low, like these key lows over here, this low here, this low here, this low here, what is my secondary sort of oscillator doing? RSI, right? So each time it's making high lows, right? So it's showing me that every time it's made a new low, it's becoming weaker and weaker, right? So waiting for that breakout to the upside, that reversal to take place also. Yeah. So now if I just remove all of this, cool. So I've identified sort of my important part will be is the breakout, right? So now this is the breakout point. This is where it starts to form those lower lows and lower highs. I'm gonna place a trend line, and there's two trend lines I want to place. So the first trend line is sort of from these highs over here, right? So I'm there we go. That's the first trend line I want to apply. So that's sort of showing that convergence taking place, okay? And now I want to apply a little bit more of an aggressive trend line from that prior to that breakout high, okay? So prior to the breakout high. So place a trend line such as this. Okay, so now notice how this is where I'm focusing on now. This is where I'm going to be focusing on now. And we've had a series of lower lows, lower highs consolidation taking place. And we've got this another key level support. So again, don't just apply one support level. You can apply more support levels. I tend to like to use a horizontal range instead of a horizontal line. Horizontal line should be the one that's a very strong level. Remember, when you're looking at support and resistance, you're looking for a minimum of 3 touches. Okay, the longer that trend line or that support or resistance level, the horizontal line, has been intact for, the more impact it should have. Okay, so this has been intact for months. Okay, so it's a very key level. But we do have these, smaller sort of levels, which I do want to identify as well. So I'll use the array over here. So that being a key level support, that being key level resistance. Yeah, it's another key level support in this region here. If I just take it a little bit tighter, so in that range there, and there's another support level there. Okay, so notice how if I just minimize this a little bit and bring out my pen, so notice how, so as we have this downtrend line in place, okay, look at the importance of these support and resistance levels, right? So price sells off to this key level support, right, being held 1, 2, 3, 4. Look how many times I've been here. 1, 2, 3, 4 in the short term. Okay, then it breaks through, makes a new low. Yeah, so this has got only 1 touch to this support level, right? But then it comes back to this resistance. As it comes back to this resistance, what happens? Right, so again, it's met sort of more selling pressure over here. So that support now turns into resistance. Again, we've got a very short-term resistance in this case over here. Yeah, and it comes back to this support level. So we've got a second touch there, so 2 touches here, forming our sort of double bottom. That double bottom only gets confirmed once we have the breakout. So it's not even here that breakout. We have a slight breakout, right? Just a sort of a close of a candle breakout. But it's really confirmed once we have sort of a large candle formation taking place off this, right? That's where you see the balls really stepping in and driving market higher. Okay, so yeah, so this is what you should be doing, is counting these touches and putting emphasis on these key turning points and looking for these large breakout candles from these points to sort of identify trading opportunities. Yeah. Okay, so now let's move on. So what are we saying now? Okay, so we're saying that price is in a bull trend, right? So we've a downtrend. It's broken out of this downtrend line. It's now starting a bull trend. Can I identify any key levels of support and resistance, or can I apply a trend line? Well, how do you apply a trend line when we now sort of reverse this now? So now that we're sort of overall downtrend, now it's reversing to the upside. Something to also mention here is not the percentage of time. Ooh, what's going on there? So how often does markets rise or fall, and then it just completely reverses the other way, right? So how often does that happen? It's not always the case. Okay, I mean, it's somewhere between 20 to 30% that happens, right? Where markets reach an extreme overbought or oversold, especially in those higher time frames, and it just completely starts to reverse. Don't look for reversals. Don't look for reversals, because what this could be is a larger correction of the entire move that's taken place already, right? So what could happen is you're seeing either, if we just do one example, so if I just remove this, and I'm focusing sort of, we've got a bull uptrend, and we've got some traders who start to trade this to the short side, okay? Start selling it right at these highs, and their assumption is that markets are going to sell off all the way back to where it started over here, which is not the case, right? That is rare. That is rare. If you're looking for that move, that is almost, I wouldn't say winning the lottery chance, but you're hoping that you hit a ball to the moon. It's a very low probability setup. Okay, if you're looking for complete reversal, especially on those sort of medium to higher time frames. Okay, so that's a rare case. But what is common is price does an uptrend, right? And it consolidates for a period of time. Okay, that's the majority of the time. That happens most of the time. Okay, most of the time, this is what happens. This is what I'm expecting. And from this point, when it consolidates, converges, then we look for whether it breaks to the downside or whether it breaks to the upside, a continuation of the trend or a potential, which takes me on to the next step. Okay, so this is seen as consolidation or a pause in the market, and then there's a possibility where it pulls back is the next potential sort of opportunity. Okay, it pulls back. That doesn't mean it's going to be a huge pullback. It's a sharp sort of correction that then goes on to sort of reverse and continue to the upside. Okay, in some cases it may even correct, and that correction, instead of the pullback, this being the pullback and then the sort of reverse up there, or this being sort of that reversal there. So consolidation, continuation, and then you have a pullback, continuation, or a correction of the entire move. So that's where the Fibonacci comes in line. So if you take a fib and it's on sort of a 50% correction, and then it goes on to make a new high, right? So that's most of the cases that I've seen in the markets that takes place. Okay, so you see, one of these, when you're assuming that it's going to come all the way back down to sort of there, that's not always the case. Now, we don't know that, right? So what I might do is, if I now remove this, is I want to sort of maybe apply a Fibonacci. I want to apply the Fibonacci from where I start this sort of trend line. So let's apply that now. Where's the fib in this? Okay, from this high down to the low. Now, how you apply the fib is your choice, which means that you can apply it from the highest high to the lowest low, which is what I always prefer, right? From one spike high down to the spike low, right? Not just say, okay, I'll go from the highest high from that point, but on this fib, from this fib, I'll only take it to this support level. No, I'm not going to do that. I'm going to take it from the highest point to the lowest point, right? Which takes me sort of in line with this 50% of a hair. Okay, so I can see now that this is a 50% correction. Okay, that's a 50% correction of the entire move, right? So I might want to add 50 fib. There we go. Okay, so it's done a 50% correction of the entire move. Now that might be an indication, okay, this has become 50% cheaper if you think about it in another term, okay? So another way, why do we use fibs? Fibs is great to understand sentiment in the market, right? This is, 50% cheaper for those traders to get back in for the short side, okay? So yeah, we might see an opportunity where it continues to sort of, go in line with this overall downtrend that we're seeing over here. Or if it doesn't really sort of, really break through this point over here, starts to sort of breaks lower from this point, it's, maybe breaks back above, sort of back into this zone over here, that's where you can start to look for that reversal. But don't be quick to assume that this is that full reversal. This could be just a larger correction, a 50% correction taking place of this entire move, which leads to the next selling opportunity. Okay, so now I move down to maybe sort of, a lower time frame, the 15-minute time frame, and you might, this is where you've done your analysis, and that's where you start to, this is the time frame that I start to form trading opportunities, trading ideas. What trading ideas do I want to take? Okay, so now I'm looking for maybe, I can apply a trend line, so I'm looking for price. So I've said this is my 50% Fibonacci. I've applied a counter trend line, something similar to this, right? Counter trend line. So what I'm looking for is price. I'm looking for price to either retest this, maybe form like a double top, and then break through this as a selling sort of opportunity, right? Go sell there, right? Or I'm waiting for price to break through this point over here and look to sell at this point over here, back down to sort of a key level. I could probably say that support level, or back to sort of this key support level. Be aware there's a 135. Do put emphasis on sort of round numbers. 135 being there, 137 up over here, right? So you've got 136 in this region over here. So just be aware of these round numbers also. In addition to that, that might be sort of the earliest way of entering. If I've seen over time that doesn't really work for me, I want to sort of give myself more time or increase the probability of my setup, then I can look at, okay, I'm waiting for price to confirm this by price goes on to break through this level, does a retest, pulls back, retest this level, and then makes a new low, and then sell through the break of this low over here. Then I've got sort of, a lower high being formed and a new lower low beginning. Okay, and that might be sort of a way of adding to your confirmation for that setup. Yeah. Something else to note is the RSI. So the RSI, it's below its moving average. It's below its moving average. It's I've got this sort of this cloud. When it's below that moving average, it's negative. So it's already showing me a negative opportunity potentially. But I'm waiting for if I just get rid of that. So I might want to wait for it to cross through the 50 level. I might want to wait for it to break through the low, cross through the 50 level as another sort of opportunity. So now something else to also mention is if I just do that, that's okay, that's good. But as a trader, remember your number one job role is to trade momentum, trade direction. Yeah. Which also means that don't limit your opportunities. Now, if you see that, okay, there may be an opportunity to take it long from this point over here, also have that set up. Don't limit yourself to sort of, one direction, okay, sort of one side, right? So assuming that sort of, that's taken place, I might want to move down to a 5-minute time frame, right? Let's just go with, I'm looking for a short. Sort of, let's just go with this. Looking for a short through this point over here, through my counter trend line. My stop loss will be above the resistance, so above the 50% fib level, above the most recent swing high. I might even now, just knowing that we're close to that 137 figure, might want to be just above that 137 figure also. Okay, so I've got a couple of reasons now. I'm above the fib 50% level. I'm above the swing high. That's 2 reasons. Third reason is I'm above a round number, just in case it spikes through to test that level and then sells off. Okay, and then my target, I'll target back to sort of, within the next range, not the one just above the 135, somewhere in that range there. Okay, so that will be my sort of opportunity there. Yeah, and that's how you would want to sort of, go about it. Now, what the next step is, if I just expand that, is now to move down to the 5-minute time frame, and this is my execution time frame. Timing and execution is what I'm looking to do, right? So on here already, I can see sort of, the RSI breaking through the low, coming back to retest this region over here, expecting another new low to come through if this breaks through also. I'm just waiting for the type of candlestick to enter. This is where you might want to use time and price filter. Yeah, so time filter meaning that, you wait for the candle to close off that time frame or a slightly higher time frame to enter the market, or as soon as price has met, as soon as the candle meets that price level that you're looking to enter, that's when you execute the trade, even if the candle doesn't close at that point over here. Yep, so that's your time or price filter. You need to define which filter works for you, and that's how you will execute your trade. You let it run, right? And then over time, you want to manage that trade. You want to look to manage that trade. Now, predefine when you want to manage that trade, okay? So if I'm expecting this trade to last 6 hours, I'm expecting this trade to last 6 hours, right? I'm not going to be on a 1-minute time frame looking at it candle by candle and waiting to, trail that stop loss every couple of minutes. No, you want to take more of a relaxed approach. You just say, okay, I'll have a look at it every 30 minutes, every hour, see if I can reduce my risk. Right? There's no rush to sort of, managing, it's just finding the right time that works for you. Now, if you're expecting the trade to last for 15, 20 minutes, then I can say, yeah, then you could be, looking at the time every 5 minutes, have a look at every every 5 minutes to sort of, bring in your stop loss or extend your target or whatever you need to do, right? So yes, don't be, over managing the trade either. Yeah. So once you've taken this trade, I also want you to remember that it's a probability. It really bugs me when, someone says to me, and I've had someone say to me recently, they had one bad trade and that's put them off for the entire week of trading their live account because of that one trade. For that to happen, you're definitely doing something wrong. You're putting too much emphasis on a single trade, and that should never be the case. Because if you do that, then you're sort of, all your hopes are on one trade, whereas you should be thinking about the longer term picture. Okay, so don't put all your hopes on a single trade or a single day's worth of trade or even a single week's worth of trading. So if you do that, you're really in this for the short term. Your psychological will have more of an impact in your trading, and you may not last as long as you could last, and really sort of maximize the opportunity and really be able to prove yourself in this field. Okay. Remember, mistakes are part of trading. I still make mistakes. It's okay, as long as I learn from those mistakes, I, enforce those lessons that I've learned through my trading, which is key. Yeah. Okay. So that covers sort of, the full process, talking about the STEM. So setup, trigger, execution, management. We spoke about sort of multiple time frames, applying your analysis. Are there any questions before I move on to the next part? Are there any questions? Okay, so Bunyod, how to add these colors to the RSI? This is sort of an Alphachain RSI indicator. I can share the code with you, and then you can look in the code and just make the adjustments. But this is not a standard RSI. This is looking at sort of two RSIs. That's what creates the cloud. So we've got a standard 14-day and a 20-day RSI. So if you can see there, 20 and a 14-period RSI. And then we have a moving average. We have a moving average, which helps us sort of, outline sort of, whether it's a bearish or bullish move to this. So I can share the code with you. There's no issues there. This is on our ATP program, and something that we've developed recently, our own sort of custom indicators.